This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Double take. Does the Fed see something in the economy that others don't? With the widely executed cut in stimulus now on the proverbial back burner, is it time to rethink the way you invest?
Whale of a fine. JPMorgan will pay almost $1 billion more than expected and admit wrongdoing as part of its London whale trading debacle. And that wasn't its only big legal payout today. What the fines and settlements mean to the firm, its business, and its shareholders.
And buying in the sky. We don't like it, but we do it. Shell out money for stuff when we fly, and it's becoming a big profit center for the airlines. All that and more tonight on Nightly Business Report for Thursday, September 19th. Good evening, everyone. I'm Sue Herrera in this evening for Susie Garrett.
And welcome, everybody. I'm Tyler Matheson. Well, yesterday, stock investors were caught by surprise. Today, they caught their breath. Stocks exhaled modestly today, one day after that big rally on the unexpected news. The Federal Reserve would continue buying $85 billion in bonds every month to keep the economy on track. Most on Wall Street figured the Fed would take its foot off the gas pedal, if only slightly. Well, yesterday, record highs for the Dow and S&P. Today, profit-taking, not just in stocks, but in bonds too, as yields rose. The blue-chip Dow stocks saw a 40-point pullback. The Nasdaq did manage a small gain of 5 points for a fresh 13-year high, but the S&P was down 3.
Some strong economic data out today were not enough to lift the markets. First-time jobless claims rose by 15,000 last week, but filings are still near multi-year lows. The Philadelphia Fed reported factory activity in the mid-Atlantic region surged to a 2.5-year high this month. And existing home sales rose 1.7% in August, hitting a 6.5-year high as potential home buyers rushed to make deals before mortgage rates rose higher. And a reading on the economy's future health posted a solid gain last month as leading economic indicators rose 0.7% from the month prior.
So with stocks just off their record highs and some solid economic data just out today, does Ben Bernanke and his team of Fed policymakers know something about the economy that we don't? What are they worried about that the rest of us seemingly aren't? Hampton Pearson has more now on what the Fed didn't see in the economy and what it needs to before it tapers all that paper it's been buying.
The day after Federal Reserve Chairman Ben Bernanke and his fellow monetary policymakers delivered shock and awe to financial markets,
no taper. The Federal Reserve did not taper.
Economists and analysts are revising their playbooks for predicting just what will it take for the central bank to pull the trigger on tapering.
The Federal Reserve Chairman is very clearly saying, read my data.
In the 4 months since the Fed chairman first mentioned gradually reducing its bond buying program, that data shows job growth has slowed to just 155,000 per month on average, and mortgage interest rates have increased a full percentage point, topping 4.8% last week, putting the brakes on the housing recovery.
The committee has some concern that the rapid tightening of financial conditions in recent months could have the effect of slowing growth.
Today, there was encouraging data showing existing home sales on the rise and the monthly average for jobless claims at a 6-year low. But the debt ceiling and budget standoff between the White House and Republicans and its impact on a fragile recovery is, Fed watchers say, also on policymakers' radar screen.
I think that it's the politics of it make everybody nervous, and the fact that the Fed is having to react to not only politics in terms of what's going to happen with the debt ceiling.
So for now, the Fed is on hold, awaiting the outcome of fiscal policy battles over the debt ceiling and budget to decide what's next for monetary policy when the Fed meets again at the end of October. For Nightly Business Report, I'm Hampton Pearson in Washington.
The Oracle of Omaha, Warren Buffett, spoke about the economy and the Fed today. Mr. Buffett says the U.S. economy is continuing the, quote, gradual increase that it started since the fall of 2009, end quote. And as for the Fed not tapering yesterday, well, here's what he had to say.
I didn't have any great expectations one way or the other. And it doesn't really make any difference to me in terms of our business or our investments, whether it's 0 or 10 billion or 20 billion. I mean, someday it'll stop and maybe it'll go the other direction.
Well, our guest tonight says that he was surprised the Fed did not taper and that he's not making changes to his investment strategy based on whether it tapers or not. He is Jim Paulsen, Chief Investment Strategist at Wells Capital Management. Welcome, Jim. Good to see you.
Good to see you, Sue.
Did the Fed miss an opportunity, however, even though they didn't taper in your book?
I think so, Sue. I mean, I think they eventually are going to have to start to taper. That's a sign of every successful recovery as the Fed reins in its stimulus. And I think they had an opportunity. Obviously, the markets leading up the last several weeks, most of us all thought they were going to taper, and the markets seemed fine with it. The S&P before yesterday was close to highs. The market was being led by economically sensitive stocks. Didn't look like it was very fearful, and now they didn't taper, and they've created a lot of uncertainty as a result. They're going to have to eventually come back and taper sometime, but now they've created a lot of uncertainty around it, which they probably could have avoided.
As I was listening to Mr. Bernanke yesterday, I thought that, well, he was saying he was a little bit worried about the economy. Should we be?
You know, Tyler, I don't really think so. I'm fairly pleased with the reports coming out. Today's a great example of that. Across the board today, as Sue earlier said, from unemployment claims to housing to leading indicators to the Philly Fed, all suggesting acceleration in the economy. We have, for the first time ever, simultaneously expansion going on in manufacturing and in housing, a constant fall in the unemployment rate, 5-year highs in confidence, as well as an all-time high in the stock market. I think certainly the economy is better than it was, and yet the Fed is still applying the same medicine that it was applying when we were at the bottom of the recession. There just seems to be a disconnect to me.
How are you investing in the environment that you just laid out for us, Jim?
I would pay more attention to reports off Main Street than the conversation around the Fed. I think that might get you down a wrong path. I still think we're on our path to recovery, slow for sure, but certainly slow, steady progress. And I think that's good for stocks in general. And it leans me more towards the economically sensitive areas. Right now, I like the material stocks and technology stocks and the financials. I really like the industrial sector, but the stocks have done so well, I think I'd shy away from that, as well as the consumer discretionary stocks. They've just done too well.
I gather, Jim, you're of the view that all of the monetary stimulus, the bond buying, hasn't really done much to help or bolster the real economy, but an awful lot of people believe that it has done a lot to inflate asset prices. Where are you on that? And if eventually the Fed does take some air out of the balloon, what happens to those asset prices, including stocks, bonds?
You know, Tyler, I don't think it's done much for the economy or the markets. I really don't. I think that they put $3 trillion, and all of it's come back to the Fed in the form of excess reserves. No bank needs those reserves. They're not calling for them, so they sit on reserve at the Fed. They haven't even been in the economy. I think the stock markets come up because the economy's doing better, and people recognize that, and they're willing to step up and pay more for it. And my evidence of that is the stock market was doing just fine in these last several weeks when everyone expected the Fed to start to taper. It showed no fear of tapering at all. So I think we'll be fine when the Fed does taper.
Okay.
What I hate is when they seem to put so much mystery around it, it creates some uncertainty. Just as you said, Tyler, what do they know that we don't?
Right. On that note, we'll leave it there. We'll see whether we can come up with some answers on that one, Jim.
Thanks.
Jim Paulsen, Chief Investment Strategist at Wells Capital Management. And be sure to head to our website, nbr.com, to read Ty's blog on Fed's no taper decision.
Well, the economy has been growing, as Jim just said, albeit slowly, and has been for years now. But new data from the Census Bureau confirms that the economic gains are uneven. In what's been called a selective recovery, overall poverty is flat compared with last year at a record 46.5 million Americans, but it is growing sharply among single-mother household and Hispanics. The share of the population in the lowest income group, below $25,000 a year, is also expanding. It's now 24.4%, up from just above 21% 4 years earlier. And despite low interest rates, home ownership fell for the 5th year in a row to a shade under 64% of households.
Meantime, a new survey finds that most companies plan to give workers a raise next year. but it's not going to be very much. Towers Watson Data Services surveyed 910 U.S. companies and says that nearly all of them plan to increase employee salaries next year, but says that that increase will average only about 3%. That's just slightly larger than the ones doled out over the past couple of years.
And although home ownership rates are down, people who do own homes are feeling better about them. And they're even feeling better about the terms of their home loans. And that's changing the way many Americans are managing their debt. Diana Olick explains.
During the recession, most Americans paid their bills in this order. First the car, then the credit cards, then the mortgage.
A lot of people were underwater, so they let their mortgages, go if they couldn't pay all their loans.
Now suddenly the mortgage payment is trumping the credit cards, the way it was before the housing bust.
People are more likely to pay their mortgages as the housing values recover.
Home prices are not only well off their lows of the crash, but they're rising now faster than expected. That makes people feel better about their single largest investment.
I think if you own a home, you have to put your mortgage first ahead of any other debts that you have.
Why is that?
Because it's the basis of all your family's financial planning.
I figure I always need a place to live, and with credit cards, I figure you can negotiate with your lender.
While the overall trend is favoring the mortgage payment, as with everything else in real estate, the story as well as the recovery are local.
States that went through the housing bubble first and are going through the recovery first are seeing a stronger improvement in the mortgage payment hierarchy.
In harder hit markets, the reversal will take longer. The good news, at least nationally, is that fewer borrowers are choosing not to pay their mortgages altogether. For Nightly Business Report, I'm Diana Olick in Washington.
Well, it was $1 billion day at JPMorgan Chase, but not in a good way. The nation's biggest bank settling with U.S. and British regulators agreeing to pay a $920 million fine and admit to poor oversight that led to $6 billion in trading losses in the so-called London whale fiasco. And in a separate settlement, the bank will pay $389 million to refund credit card customers for illegally pushing costly services on people who didn't want them or need them. Kayla Tausche joins us now with more on this 1-2 punch against JPMorgan. Kayla, does this do damage in any way to the reputation of JPMorgan, the bank, or to its CEO, Jamie Dimon?
I think Jamie Dimon, Tyler, has already been under siege. This investigation has been going on for over a year, so to say that today is the day that would damage his reputation, I think would be false. We'll have to watch the reputation of the company going forward. One thing is clear, which is that with this regulatory onslaught, they've been canceling new growth initiatives. In the consumer bank, for instance, they had roughly 60 new products that they were going to roll out. They stopped doing that because regulators have said you need to focus on what you're doing now and make sure that your existing regulatory controls are up to snuff and that this doesn't happen again. Don't worry about venturing into new businesses quite yet.
Could they lose clients, though? Could it damage the reputation of the bank to the point where people don't want to do business with them on a larger scale, or is it too early for that?
Well, it depends on what regulators ultimately say. A lot of companies really like working with JPMorgan. They're the fortress bank. They have the single biggest balance sheet of any of the banks. So if they need a big loan, they go to JPMorgan and they still will. The problem is that the bank might not be allowed to take on new clients. In its clearing business, which is where a bank or a foreign multinational company would be clearing dollar business through a bank like JPMorgan, they can't take on new clients because the regulators have said this is not a well enough observed business, and you shouldn't be doing dealings with new
Today,
clients.
about $1.4 billion in settlement costs. Last month, it was about $400 million with respect to the FERC settlement on electricity trading. How much has the bank had to set aside to address these costs?
It's interesting. It's like a black box. What these banks set aside, they share that number with their regulators. They don't share that with shareholders. A lot of investors have been advocating for that, saying that we need to see that number, but unfortunately we don't get it. Analysts have estimated that JPMorgan has in its reserve roughly $10 billion earmarked just to pay out these legal fines. Unfortunately, the bank has also said that it expects to pay upwards or roughly $6.8 billion, as much as $6.8 billion on top of whatever it is they have earmarked already, because those fines are growing so much.
Kayla Tausche, thanks very much. Appreciate it.
Well, here is another case of employees accused of behaving badly. A former executive at Halliburton, the oil services company, has been charged with destroying evidence related to BP's 2010 Gulf of Mexico oil spill. Anthony Ballamente is accused of ordering other Halliburton employees to delete computer data related to a review of his company's work on that doomed rig. Halliburton did the cementing on the drilling rig that exploded, killing 11 workers and triggering the largest offshore oil spill in U.S. history.
And still ahead, the Syrian president doesn't just control a stockpile of chemical weapons, but also a pile of cash. We're following his money trail. But first, let's take a look at how the international markets closed today.
A sharp drop in the shares of furniture retailer Pier 1, and that's where we begin tonight's market focus. The company lowering its profit forecast for the full year after reporting a big miss on revenue and earnings in its most recent quarter. The CEO says management and marketing efforts fell short and new merchandise wasn't put in the stores as efficiently as in the past. But he did note that Pier 1's online traffic is up. Well, the stock responded by falling almost 14% to $20.33 on heavy volume. ConAgra coming under pressure after reporting weaker than expected earnings and warning of soft profits for the current quarter. Brands such as Marie Callender's frozen meals and Chef Boyardee's pastas aren't selling as well as had hoped. And to turn things around, the CEO plans to increase promotional activity. The stock finished the day at $30.80, a drop of 4%.
Bit of a different story for Rite Aid. The drugstore chain surprising analysts who had anticipated a loss with an unexpected quarterly profit thanks to increasing sales. That usually helps you. The company also raised its forecast for the year. Investors cheered the news and sent the shares up more than 23% to $4.58, nearing a 6-year high. Agilent Technologies, a maker of scientific testing equipment, is splitting into two publicly traded companies. One's going to focus on life sciences and diagnostic equipment and will go by the name Agilent. The other, yet to be named, maybe just call it not Agilent, will focus on the electronic test and measurement equipment business. Shares of the company rose 3% to $50.98. And moving fast, shares of Tesla, all-time high, after Deutsche Bank raised its price target to $200 from $160. The bank says the demand for Tesla is growing in the U.S. and Europe, and the production rate at its factory is increasing. Shares of the electric car maker up 7% to $177.92.
U.S. Secretary of State John Kerry is urging the United Nations General Assembly to move quickly in approving a U.S.-Russia deal to secure and destroy Syria's chemical weapons stockpile.
The Security Council must be prepared to act next week. It is vital for the international community to stand up and speak out in the strongest possible terms about the importance of enforceable action to rid the world of Syria's chemical weapons.
But Syrian President Bashar Assad denies that his forces used chemical weapons in an August attack that killed as many as 1,400 civilians in a town outside Damascus.
President Assad told reporters it could take $1 billion to destroy Syria's stash of chemical weapons, and if the U.S. and Russia don't have the money, he just may. Assad is believed to be in control of a family fortune that experts say could run in the billions. Scott Cohn has been following the money trail and has more.
In a country where the average citizen makes less than $3,000 a year, this is the stuff revolutions are made of. Analysts have pegged Bashar al-Assad's personal net worth conservatively at $500 million, but expand that to his inner circle, and the Assad family fortune runs well into the billions.
You have to have reform across the field, whether it's social, economic, or political.
That's Assad's wife, Asma, a British-born former investment banker in 2005. Her taste for high fashion and high society is well known. But the biggest repository of family wealth is likely this man, President Assad's cousin, Rami Makhlouf, worth billions. He claims he's a legitimate businessman, but the U.S. Treasury in 2008 designated him a beneficiary of the regime's corruption. International investigator Jules Kroll, who unearthed assets from the likes of Ferdinand and Imelda Marcos and Saddam Hussein, says Assad's money trail is a familiar path.
Well, it's a typical family business, except the family business is a country.
For years, the U.S. has targeted the Assad fortune in hopes of destabilizing the regime, according to State Department cables uncovered by WikiLeaks. But the success of U.S. sanctions has been limited. Since the Syrian uprising began in 2011, the U.S. has seized just $80 million.
They have enough people they can trade with, do business with, bank with, that I think the amount of the effect of these sanctions would be actually quite modest.
The sanctions did manage to head off a payment believed to be in the millions of dollars owed to Syria Telecom by AT&T, which instead deposited the money into a blocked account at JPMorgan, according to court papers. But for the most part, Syria simply sidesteps the U.S. financial system, barely missing a beat. So where does the money go? Russia is a prime candidate, and from there to points unknown. In fact, experts say the extent of the Assad regime's wealth may never be known unless the regime falls. For Nightly Business Report, I'm Scott Cohn.
Coming up, getting ready to board a long flight? Well, get out your credit card because the longer the trip, the more you spend. But you might be surprised by what people are buying. First, how commodities, treasuries, and currencies performed today.
The U.S. Postal Service is looking for a special delivery. The U.S. Postmaster General testified before a Senate committee today, requesting an emergency rate increase, saying the agency is, quote, financially unsustainable and needs the money just to stay in business. Despite layoffs and the elimination of mail routes, the Postal Service, which lost nearly $16 billion last year, says it'll lose another $6 billion this year unless it gets help, and fast, from lawmakers.
Auto sales have been revving higher all year long, on track for 16 million units sold by the end of December. But now there are signs that car buying may be easing up. J.D. Power and LMC Automotive, which keep track of auto and truck sales, says the rate of sales in September has slowed down considerably, putting the annualized sales rate closer to 15 million units. The reason? Well, part of that all-important and long Labor Day holiday weekend landed partly during the month of August.
Honda Motors is issuing a big recall. More than 400,000 Honda Odyssey minivans and Acura MDX SUVs, all from the years 2003 and 04, are being recalled to fix faulty airbags that could deploy inadvertently.
While Honda makes those cars safer, the nation's airlines are making flying more comfortable. And new data shows those airlines are collecting a record amount of revenue from passengers who are buying food, drinks, and other items while they're on board. But on some flights, the drinks and the money seem to be flowing a little more freely. Phil LeBeau has more.
This is the future of flying, paying for drinks, food, or onboard entertainment like a movie or live TV.
When you're sitting in a plane for that long, it's nice to have some extra comforts.
Whether it's movies or anything that makes the time go by, we're also used to doing something. We don't just sit anymore and wait for our flight to arrive at its destination.
So what are people buying in the sky? Guestlogix, which tracks almost $1 billion worth of onboard sales, says 58% of the revenue North American Airlines collected in the first half of this year was for drinks, primarily alcohol. 38% was for food, and 4% was for things like in-flight movies, headsets, or seat upgrades.
In terms of liquor sales, you see certain destinations that definitely have higher sales per flight in those segments, like flights to Vegas. On the way to Vegas, for sure, there's higher average sales by almost double.
In fact, the #1 money-making route in the continental U.S. is between Detroit and Las Vegas, ringing up an average of $179 in drink sales every flight.
I was on a flight to Vegas just recently, last week. So, yeah, there's a lot of people, getting it going early.
Doesn't surprise me at all.
You ever been on one of those flights to Vegas?
I've been to Vegas. One time I even got married over there.
While many travelers complain about feeling nickel and dimed by the airlines, the truth is more people are digging into their wallets and spending while in the air.
4 years ago, 7% of folks were buying at least one item on board. 2 years ago, that was a 10%, at least one item on board, and now we're at 12%. So the numbers show that people are becoming more comfortable.
Since most airlines no longer take cash, buying on board has become less of a hassle. But do passengers like it? Not everyone's so sure.
Overall, to think that people are going to buy normal things on an airplane that they don't need for their trip, this isn't going to happen.
Like it or not, this is just the start. Airlines are looking at how to get passengers to buy more things in the air. But until that happens, drinks will remain the purchase of choice for many travelers. Phil LeBeau, Nightly Business Report, Chicago.
Shocking that people drink on a flight to Las Vegas, isn't it? All right, with all that money being spent mid-flight and all those cocktails being served by airline staffers, a travel website asked readers if they've ever tipped a flight attendant while flying. Make sure your seat backs are upright. The answer may surprise you, folks. Out of more than 500 people who took the poll, nearly 30% said yes, they have tipped a flight attendant in the past, maybe for exceptional service, maybe for a terrific demonstration of flotation devices, or maybe just to keep those cocktails flowing till the plane touches down.
I was so surprised. I didn't think you were allowed to do that.
I've never seen it happen. I've never done it, but maybe I better think twice about this.
I think I will think twice, because that's a really tough job. All right, that's Nightly Business. Who knew? That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining me.
And we'll take tips, too. I'm Tyler Mathisen. Have a great evening, everybody. We'll see you back here, we hope, tomorrow night.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Tyler Mathisen with a Nightly Business Report news brief. Stocks retreated a bit today following the Fed's decision yesterday to keep its stimulus intact, sparking a rally that led to record highs in the Dow and S&P 500 on Wednesday. Today, though, the blue chip Dow stocks saw a 40-point pullback. The Nasdaq did manage a gain of 5 points, but the S&P was down 3. JPMorgan agreed to pay a $920 million fine to U.S. and British regulators and admit poor oversight in the so-called London whale trading fiasco. And in a separate settlement, the same bank will pay $389 million for illegal credit card practices. Existing home sales up 1.7% in August, a 6.5-year high as potential home buyers rushed to make deals before mortgage rates rose higher. And tune in to Nightly Business Report here on your public television station.